Thank you so much for that, Valen. You're quite right. Some important data being released here for an economy that hasn't really managed to find significant growth of late, but there could be a pickup. And what does that pickup in growth look like? What does it mean for you and I? In fact, why don't we start with the question of why does the GDP number even matter for the ordinary citizen in South Africa? Tshiamo Masike, the economist at Momentum, joining us in conversation for this one. Tshiamo, thank you so much for the time. Really appreciate it. Hopefully we can just start there. Why does this GDP number matter so much?
Good morning, Arabile, and good morning to the viewers. So GDP is quite an important figure that we look at in the economy because it tells us how much the economy is growing by. So it tells us from quarter to quarter whether or not we have improved in terms of activity in the economy. And this is quite important because I think from the consumer's perspective, it's quite important because then it means we can follow through to see unemployment decreasing. And we know South Africa, it has quite high unemployment rate. So if growth continues to improve, then for the consumer specifically, we can then get to a point where we decrease those high unemployment rates.
Yeah, and I think that's the important element then, because that education will form the basis of understanding for South Africans to know that it's their spending, it's their activity in this market that really drives this economic picture. And for it to have been at the levels it's at, clearly just shows a bit of strain that consumers have been feeling. Could there be a pickup?
Yes, so we are expecting the economy to grow in the third quarter of 2025. However, we are expecting quite modest growth. So the SARB has come out, it's expecting 0.4% this quarter. The Reuters median consensus is expecting a slightly higher growth than that, so 0.5% growth in the third quarter of 2025. But we also have the high frequency data that we do receive from Statistics SA that does point to this modest growth. So manufacturing production was up marginally in the third quarter. Mining production also saw decent growth, but less than the second quarter. Retail trade sales were also up marginally, and this is where the consumers then come in. We do have sectors which we don't have high frequency data for. So these would be your agriculture and your finance, and these can cause deviation from what we're expecting. But overall, we are expecting modest growth. So we saw last quarter, the second quarter, we had quite good growth. So we had 0.8%. And it was really the consumer that drove that growth on the expenditure side. That was much better than in the first quarter of 0.1%. But overall, we are expecting growth to pick up, but modestly in the third quarter.
Can we get that uptick again, considering that 0.8% uptick that we saw, as you said, was based on the consumer spending? Third quarter is a prelude ultimately to December quarter, right? So your spending doesn't happen as much and as vigorously. The anticipation here for this modest figure, 0.4, 0.5% odd, is that enough for an economy that is seeking to really pick up on infrastructure growth, on leading the conversations when it comes to development as well around the province, around the globe, should I say?
Yes, Arabile, it's definitely not enough. So 0.5%, 0.4% growth is nowhere near where we want to be. So it's not enough to push the economy and make consumers to be quite comfortable. But it is, I will just say, based on where we come from, it is much better than what we had, for example, in the first quarter. So that's 0.1% growth. What we will be paying special attention to in this third quarter's number, we'll be paying special attention to the consumer numbers. So as I mentioned, the consumer really did support growth in the first half of the year. And they were boosted by things like your low inflation, low interest rates. So we did see 3 interest rate cuts by the SARB this year already. And we had good performance in the stock market. So that also did play a role in picking up that consumer expenditure. For consumers, they are still key in our annual growth estimates. So we are expecting growth to be 1% this year. So it will be interesting to see whether or not household expenditure does hold up now in the third quarter. You also mentioned fixed investments. That is a very key factor in the economy. And I think that is more important for more sustainable growth moving forward. And this year so far, in the first half of the year, fixed investment has really underperformed in the first half. And I mean, we did have a year that was rifled with very high uncertainty so far this year. And you also saw the business confidence that did slip as a result. So businesses were not as much comfortable to then invest into the economy. But we are seeing some signs of possibly business investments picking up next year, so fixed investment picking up next year. We are seeing corporate credit has been quite robust. And I think if that is sustained, which can be helped by the low interest rate environment, then we could see a flow in fixed investment. And that is then going to set us up on the right path so that we can get more sustainable growth moving forward. We also know that structural reforms are progressing quite well. There was also a number of good news that came through. So we got removed from the grey list. We had the first upgrade by S&P in 20 years. And these are all really confidence boosters to the economy. And that can then translate to private sector being more confident about the path of economic growth and therefore being open to that fixed investment that we so desperately need to get the economy growing over the long term.
It was that same positivity that permeated through the medium-term budget policy statement that happened just last month as well. But is that enough to bring investors into the country again, considering that grey listing that has been removed, the positive sense on the budget as we have it, the lower interest rate environment, having just seen even the inflation target shifted to 3% as well? Are those all the things that could mean more investment in the country, whether by local investors or foreign internationals as well, meaning more growth?
Yes, so definitely. We are seeing a number of good streak news that are coming up. As you mentioned, the NCPPS. I think, first of all, the fact that it was successfully tabled as opposed to February, where we had 3 iterations of the budget, really does speak volumes, but it also speaks to the political stability that we are now quite experiencing. So we know that the NCPPS then had maintained fiscal consolidation, and that is what really triggered that sovereign rating upgrade by S&P. So it is good news, and because of that, then we are expecting a flow of investments into the country, which will then help the economy grow moving forward.
Yeah. How much does trade play into this number, do you think? Precisely because we're seeing that slowdown with trade with the United States in particular, and wanting to increase trade with other partners, particularly BRICS nations and the global south. How much does trade play a part in the overall GDP?
So trade is quite an important factor. I'll just start by saying when the year started, so end of 2024 coming into 2025, we were quite optimistic about economic growth. So we were expecting growth to be in the region of 1.5% and above. And that was mainly because of reasons of investments also coming in. But then as the year progressed, you would have seen that those economic growth expectations were slashed all the way down to 1%, 1.2% currently. And that is mainly because we have the exports which are going to be strained by these tariffs that the United States has imposed. So we currently still have the 30% tariff, and that is affecting our exports. So that is then affecting the economic growth prospects. So exports are quite an important factor for these numbers that we are seeing coming through, because South Africa has not yet had a deal with the United States, but we are trying to move into other markets so that we can increase those exports so that we can drive GDP. What we've seen the industry of vehicle exports, which was it was impacted a lot by the tariffs from the United States. Agriculture, we also thought it would be impacted a lot, but it's actually been quite robust. And we've seen, if you look at the numbers, you've also seen that more exports has gone to the EU, but also in the United States, it hasn't really been affected that much because of that. Where people were exporting for quicker at the beginning of the year in anticipation of those tariffs. So South Africa is working to look into other export industries so that we can help those GDP numbers. Yeah,
just as a final question, I mean, looking ahead, what sort of confidence do you perhaps have in the South African economy's growth prospects moving beyond this year? I know you've laid out 1% as your growth figure for this year. Your anticipations for the future, and what gives you the most confidence?
So for next year, we are expecting growth to pick up. We are expecting 1.4% next year. And this is, again, it's due to those consumers, and it's also due to the fixed investment that we are seeing that is picking up. So I mentioned in this conversation, so we are seeing high corporate credit, we are seeing structural reforms, and that confidence boost that is coming up. We are expecting the business confidence index. It's due on Wednesday this week. We did see the dip in confidence, but so far in the third quarter, we have seen a lot of positive things come up, right? And in the second and third quarter, business confidence was really strained by the US-strained relations. We had that Oval Office, concerns over the 2% VAT increase, which was then later taken away, and then concerns of the stability of the GNU. And all those factors are no longer really matters that can decrease confidence. So we are expecting confidence to increase. And with that, we are expecting fixed investments to increase. We are expecting consumers to also continue supporting growth in the new year, because we are expecting inflation rates to remain low, interest rates to remain low. So we are expecting growth to increase next year to about 1.4%. Then we have far more positive growth prospects for more over the medium term, and this is where the structural reforms come in place.
Yeah. Going to be very important to get those reforms in place, especially that $1 trillion over 1 trillion rand.